Larry says, find a bank you hate and buy it. Let's see what our investors think about that. Here now is Dick Beauvais, financial strategist with Rochdale Securities, and our panel is still with us as well. Dick, we showed that bank index up 109% since the March 9th low. Is there possibly more to go in the financial sector?
Of course. I mean, I think that looking at it from the March 9th point of view is not the right way to do it. Take a look at it over a 12-month or a 24-month period, and you'll see that the bank stocks have not risen dramatically. In fact, they're dramatically lower than they were when this thing started. Therefore, if they get back to where they were, and I believe that will happen, you know, we're just nowhere near where these stocks are going to go.
How's it going to get back? How are they going to get back to where they happen?
Well, there are multiple ways it's going to happen. Number one, if you take a look at the non-cash charges that are hitting the industry right now, and you make the assumption that they'll go away in a stronger economy, then the banking industry is actually showing the strongest cash profits that we've seen ever. We've never seen cash profits in this industry as high as they were in the first quarter, and I'm sure when the second quarter numbers are all completed, you'll see that the numbers are even higher.
What's driving all those cash profits? Is that basically the yield curve has steepened? What's behind that? What's
behind that is that the banks are overcapitalized. They have more reserves than they've ever had before in their history as a percentage of loans. They're highly liquid, not close to 10% of their assets are in cash. The companies have increased their market share relative to all other forms of shadow banking. Everything is moving in their direction once this recession is over.
Don Luskin, are you as bullish as Dick Beauvais on the financials?
No, not. I'm the absolute opposite. I think there are one or two who are going to end up being the beautiful needles in a crummy haystack. But I think as a sector, it's basically wiped out as a growth opportunity. As far as I'm concerned, all the juicy stuff has been taken away from them forever. No more CDOs, no more subprime mortgages, no more SIVs, no more private equity fees. What's it going to be? Free checking accounts in the branches, giving away teddy bears? Come on, this is not a growth industry anymore. This is a regulated utility. Get ready.
That's an interesting take, Dick Beauvais. What do you think about that?
Well, I mean, I don't think that the banks made that much money off any of the products that we just mentioned. They make
they
loans.
Lost a lot, in fact, didn't they?
Yeah,
they took a lot of capital losses, but that's where all the fees were. That explains all their growth for the last 10 years in the bottom line.
Very low-cost funds, and that's where their profits come from. And that profit source has not contracted, has not gone away. If the United States economy wants to borrow money in the future, they're going to have to go to the bank. And when they go to the bank, they're going to see that this industry is growing. These companies are going to show 500% increases in earnings over the next 5 years.
It doesn't matter what they show. I mean, the financials are a great place to work. They're a lousy place to invest. Right now, they're making money. They're borrowing cheap from the Fed. They're making risky bets, and they're bonusing out all the profits. But when the bets go bad, the shareholders are going to get stuck holding the bag, and the taxpayers are going to get hit with more rounds of bailout money.
They're not making risky bets. This is ancient history.
No,
I mean,
it's
you
not.
have no concept of where the banking industry sits at the present time.
Oh, sure I do. I know exactly where it sits.
96.5% of the loans in the industry are paying interest and principal on a timely basis. That's not high-risk lending.
No, you don't.
That's common. That's lending to people.
They're risk averse.
Hold on. Go ahead, Peter.
If you look at the financials that are generating profits, it's the ones that are doing all the proprietary trading.
Goldman
the companies
Sachs.
that are actually making real loans, they don't have big profits. It's the Goldmans, it's the Morgans. This is how we got into this mess. And you know, Don
Jerry
Luskin
Boyer,
is right.
you wanted to get in there.
Yeah, well, look, Larry is absolutely right. For the short run, if you can borrow at 0 and lend at 5, you've got to make money. Just in regular banking, it doesn't have to be high-risk stuff or trading. Just borrow low and lend higher. Now, when the inflation comes, that might be a problem, but that inflation isn't here yet. Now, I understand that some of these banks are utilities, right? There's two kinds of banks. There's going to be the banks that de-TARP, and they're great. Buy them like crazy. The banks that are TARP, they're going to be run like General Motors.
Steve Grasso, with all the institutional clients, hold on a second. I want to hear what institutional clients are doing. What are we seeing with fund flows on the floor when it comes to these financials?
They made their bets, and with the secondary offers, they bought those, but they're not doubling down and tripling down at this point. So I don't see real funds going back into the financials at this point. But I actually do have a question for Dick Beauvais. Dick, my clients are looking more at Bank of America as the barometer for the market. Is that a flawed concept?
No, I think Bank of America is one of the best banks in the United States. I think that Obviously,
what a statement.
Yeah, they would be broke right now if they didn't get government money.
The country, and you don't think that that shows enormous
they were dumb enough
power.
to buy Merrill. They were dumb enough to buy Countrywide. How smart can they be?
Wait,
One
Merrill
out
worked
of
out for
every
it.
$8 in the United States deposits are sitting inside a Bank of America. Do you understand the amount of power that is necessary to gather that much in deposits? Merrill Lynch is going to be a significant positive for this company. It has 16,000 reps that are selling financial products. It takes the bank out of the United States into places like India, China, Japan, where the bank needs to be.
They could have just let them go bankrupt, and they could have bought up those reps a lot cheaper.
I don't think so. I think that essentially, if you want to get into an industry where you're not a participant, you're going to have to pay up to do so.
Dick Bove, is it indiscriminate buy across, or give us two names that you think are the very best?
Well, I think J.P. Morgan is the very best in the industry, and I think if you want to get a safe way to play it, buy Bank of New York.
All righty. Dick Bove, thanks so much. Jerry Boyer, good discussion. Don Luskin, thank you as well. Steve Grasso and Peter Schiff, we're making them stick around. They have more work to do.